Greetings, Algo Artisans. It is Tuesday. We're going to take a look at the economic data coming out this week, look at Bitcoin, gold, and USDJPY. We're going to jump into it right now. Okay, so we're looking at Forex Factory. We're going to look at this economic data coming out this week and how it might affect markets. At 8 a.m. Mountain, that is 10 a.m. EST, the consumer confidence data came out a little higher than normal. So this is going to be a dollar strong event, which means that the stronger consumer confidence is, the less likely that the interest rate cuts are going to be needed, right? The whole idea of hiking interest rates was to put stress on the economy. So if the economy is not showing stress, that means that inflation is not going down, and that dropping the rates is not going to help anything. It's just going to make inflation go up. So when we see dollar strong news, that means that everything against the dollar is going to temporarily at least go down based on all of that logic. Now we have the CPI data for the Aussie dollar coming out at 9:30 p.m. EST tonight, which is sometime in the morning for Australia. So if you are trading the Aussie in the Forex markets, watch out for that. It's year over year CPI. It is the big number. If you're trading the European market overnight, we have the German prelim CPI, which is going to probably be pretty heavy on the euro. Okay, so Germany is the powerhouse manufacturing wise of Europe and banking wise. So their CPI, their inflation is very important. It's going to matter when it comes to the euro. Not a lot going on Wednesday after that. Thursday morning, there's going to be the GDP quarter over quarter. So if that information is a big miss, that might cause markets to go into a tizzy, anything related to the dollar. And at the same time, the unemployment claims are being released. So either of these being a big miss could cause markets to be unpredictable and move in big ways. And then not long after that, an hour and a half later at 10 a.m. EST, we have pending home sales month over month. And of course, home sales or the lack thereof is going to reflect on the strength of our economy. And so all of these together are going to probably cause at least a temporary economic shock, which could throw off trades, could cause stop outs, could also be profitable. And I do have a way that I trade news, but I share that only with Algo Factory. And I generally don't trade news the way that people think that I trade it, but I do have a method. And if you want to know more, come to algofactory.tech. Some good opportunities if you know how to do this properly. Canadian dollar, 8:30 a.m. on Friday. GDP is coming out month over month. And the PCE price index month over month on Friday for the US dollar, which is undercover, probably going to be something pretty wild if it's a big miss. And what I mean by something wild is that it can cause markets to make some unexpected moves because this is actually an inflation measurement, and inflation is the big talk these days. So let's move over to the charts, and we'll start by taking a look at USDJPY, since that is kind of the big news right now. Algo Factory, we had a pretty successful trade going long on that and still more or less in play. In fact, I think I might see a trade right here on this chart. A little bit of a backstory here. There is ostensibly a currency war going on, or allegedly really. And so basically Japan no longer is going to stay with negative interest rates, and they may go with quantitative tightening. And that being the case, the control mechanisms that held the JPY underneath 152, those are gone now. And while Japan is talking about strengthening their currency, right now it is actually weakening. It appears that somebody is selling a lot of Japanese yen into the market. That's what would cause the JPY to get weak. Right now, the big talk is that the Japanese may have to hike interest rates at some point because the way that this is affecting their economy, their currency is getting weaker and weaker, causing more inflation. So hiking the interest rate would make that currency stronger, and I think it'd be the first time they've done this in nearly a decade. So what does this mean from a trading standpoint? Well, we can look at this from a couple of views. We can have a little bit of a higher time frame look with a Fibonacci extension. We're going to go bottom to top on our impulse here. We're going to measure with the Fibonacci tool from the bottom to the top once again. And we have some higher targets right here at 162.86 and 166.94. Those are yen per dollar. Now there is a short-term look that we can do as far as what targets might be good to take sooner. And the impulse would be from here, the bottom of this wick, up to the top of this move. That's the impulse. And it does appear the price is already going to continue up. It didn't even pull back to touch the 382, which is what I look for in a strong move. Nonetheless, the Fibonacci targets do still apply. Now price may simply come back down before going up there, but let's take a look at these upper targets, because these are, in my opinion, some good short-term targets as long as my algos tell me that I can go long on this trade. 158.20 and 159.47. And I do believe I can and might even go long right now. Let's see. Okay, so we got bullish on the daily and bullish on the weekly, and it's pretty much bullish all around. So I think a pretty decent trade to take with some great risk to reward, and I'm going to take this trade right now. I'm going to use the bottom of this move right here for my support, have my stop loss below that. I'm going to enter my trade right here. I'm going to have my targets just below these areas, not quite at those fib levels, right? Just below that, because a lot of people are going to be looking at this the way that I'm looking at it, and they're going to take profit up at the fibs, so I like to front run people, and also to avoid issues with the spread. So here's my trade. I've got a stop loss at 156.48, targets at 158.71 and 159.42. I'm going to go ahead and post this. Now, ideally, I would wait until the breakout, but this is a trend continuation trade. That being the case, I do believe that the trend will continue. The algos all say that it will. We have some good support right here, and we do have other support from prior to this impulse, some outside structure also supporting price here and here. Now, this is some pretty strong risk to reward. So I am going to, because it hasn't broken out yet, and because I didn't catch the bottom really, I didn't catch when it flipped, I'm going to go ahead and risk a smaller amount on this. It will not be a full-size trade. And as it breaks out and I get a pullback, I will add to that trade. Now, I am in this trade, and I'm going to add one line here. There's this pivot point back here that could give price a little bit of trouble. And I'm going to explain what that is here with a drawing. You can see that price came down from this high, pivoted up, and then pivoted back down. And that pivot point may create a little bit of trouble for this trade. So instead of waiting for profit to be taken before I make any moves, as price comes up to this area, I'm going to set an alarm to tell me to review the trade, move the stop, and that's going to protect the trade in the case that this structure causes price to reject to the downside. As per this drawing, price heads up, and if it rejects down, at least I'm protected and I don't lose my money there. So that's the trade, and I'm going to go ahead and throw that up on Twitter as well. Okay, so that's the USDJPY in a nutshell, and that's nice to pull a trade out of the lesson, and it was a pretty good time to take that trade. Ideally would have been a little bit lower, but I can't ask for much better of an entry than what you're looking at right now. So let's move over to Bitcoin. Now, this Bitcoin chart is one that we have been looking at for weeks, as a matter of fact, now months, going back to the beginning of March. And so what we are looking at now is my prediction more or less come into play. I talked a little bit about this morning in the live show, so I'm not going to spend a lot of time on it. We have price inching up, and as I predicted over 10 days ago, price is consolidating at the top of this range. However, it does seem to be showing a little bit more weakness than I predicted, and that's fine. I'm still happy with this prediction. Now, this morning, there was a liquidity pool right about this area between 66,500 and 67,100, and price probably will go down to grab that before it does anything else, because right now obviously the price is falling a little bit. There are narratives out there having to do with MT Gox moving coins to possibly sell them, and people are talking about that. I'm not sure that that's really the problem. There's always some kind of narrative that these news hounds like to sell. I'm not saying the narrative is untrue, but what I can tell you is that this price action was predictable. This move down starting a day or two ago was very predictable, didn't require something with MT Gox or anything like that. So that said, I do expect price to grab that. Now, when it does, if and when it grabs this liquidity right here, then I'm going to reevaluate, and I will take a look at that. And if something changes, I will let everybody know. Let's take a look at gold. Now, I drew this chart going back maybe 3 or 4 days, 5 days, and I drew it during class. So my prediction was that price would go down, gather some steam, and head back up, and it would gather steam at this liquidity area. And I wasn't being terribly precise with this drawing, but you can see that that really is playing out. I drew this going back almost a week ago, and here it is, doing pretty much what I said it would do. Now, it doesn't mean it's going to continue along this path, but given what I'm seeing in the algos and the price action, it's at least going to go sideways and probably going to start going up. Gold and precious metals are all very strong right now. We've talked many times on these shows about the past price action, so I don't feel that I need to go too deep into it, but I will take a brief high time frame look so you all can see what I'm talking about. Maybe you're new to the channel, but going back last year on YouTube, you can go to the Algo Factory YouTube and look up some old episodes. For a year, I've been saying that gold is probably going to break up out of this consolidation and move up to 3,000. Really, 2,800 was my prediction. And gold right now certainly has popped up, and that pop-up did seem to start with the October 7th event in Israel. It really started to go up from there, and of course, gold tends to do well, tends to skyrocket during times of war and times of political instability, things like that. Gold is looked at at as a safe haven. So we're seeing it happen now, but this is something that Be the Grill and I've been talking about for years. The writing has been on the wall for a long time that gold is probably going to start to do well. And if everything really takes a big move in the political arena, and if everything really, really changes, then gold is no longer even going to be valuable in dollars, assuming that dollars don't even matter at that point, right? I mean, if we really see a big change, then gold's going to, go up to 10,000, maybe 50,000. Now, we don't know that for sure. That is kind of predictable. I mean, usually dollars or whatever currency it is, usually currencies kind of hyperinflate before they go away. I don't know that that's going to happen to the US. I think a modicum of that is happening right now, and we're seeing it in the gold price. However, the future is completely uncertain. So we're going to see how well it holds on. But for now, at least for this next few months, this is what I see happening, right? Next month and a half or so. Okay, well, I hope this video was helpful. Please come on over to algofactory.tech. We teach people how to build trading methods, otherwise known as algorithms. These trading methods allow people to possibly extract money from these markets on a regular basis. The biggest predictor of success in building these trading methods is going to be your work ethic. Most people who stick with this and follow the process, trust the process, end up being successful building these algorithms. So come on over. In the meantime, go ahead and have a listen to one of our clients who's very happy with his results at Algo Factory.
Hey guys, so I've been in Algo Factory for around 10 months now. I held crypto, but I hadn't traded crypto or Forex before. Since joining, I've learned a massive amount that I use almost daily for trading, reading charts, using indicators, and understanding different aspects of the market. So I found the course incredibly easy to follow, and the interactive style of teaching is incredibly beneficial. So now that I'm comfortable in my trading ability, I'm starting to invest more capital, and projections are looking very promising. My goal is to be trading full-time in the future, which I believe is highly achievable. I've met an amazing community of like-minded people and made some great friends. In my opinion, both V and Cowboy go above and beyond, and I highly recommend joining Algo Factory. Thanks for everything, legends. Cheers.
Okay, thanks for listening to that. Don't forget, trade your job, upgrade your life. We'll see you on the next one.